HK candles or Heikin-Ashi candles are another tool we'll cover in this series of short indicators that are used by chartists when trading in the stock market. I want to start with a simple reminder that even if you've been trading for a while, these simple and short refreshers can really help. So what are HK candles? Profits and losses are typically generated in trending markets, so predicting trends correctly can be extremely helpful to your profit and loss. The Heikin-Ashi technique, or average bar in Japanese, can help assist the trader in identifying current trends. On the left side, you can see what this will look like on my charts typically. If you compare it to the regular candlestick on charts on the right side of your screen, it's apparent that HK candles help easily identify trends versus a lot of the noise in regular charts. And here you'll also note some of the previous indicators we've covered in this series so far. As well, before we continue, you will likely have noted my candles are tricolored. This is a great custom indicator I use on TradingView to monitor trends while trading, which I'll cover in the next lesson. Normal candlestick charts are composed of a series of open, high, low, close bars that are set apart by a time series that you choose. The Heikin-Ashi technique uses a modified formula that's shown here, and the modified close consists of the average price of the current bar. The open is, instead of just being the open, will be the midpoint of the previous bar. The modified high will be the highest value in the entire set for that time period, and the modified low is the lowest value in the set. This is kind of the in-depth behind the candle stuff, but most importantly, what you need to know is how to use them. There are 5 primary techniques and signals that identify trends and buying opportunities, and they're listed here. You can feel free to pause this and read if you'd like. I don't use these exactly because I don't use the shadows and the hollow candles. I instead use the tricolored candle to assist me monitoring trends. But you can pause this and go over these rules for using HK candles, and can really help you in your trading. As you can see here again by my side-by-side charts, I like to use HK candles a bit differently than the previous typical signals that were mentioned. And while I use a full technical chart with my indicators to determine, where an equity is headed, the time frames until expected trend changes, and even price targets to seek out, I like to use a broken down HK chart like this to determine the best entries and exits for my position, because it makes it super easy to find when the trend is changing for your direction. The HK technique is extremely useful for making candlestick charts more readable, and trends can be located more easily. Buying opportunities can be spotted at a glance, as you see here. The charts are constructed in the same manner as a normal candlestick chart, but remember, there is the exception of the modified bars formula. When properly used, though, this technique can really, really help you spot trends and trend changes from which you can profit. This should give you a basic understanding of HK candles and how they can be applied to add to an effective trading strategy. This very important indicator gives professional traders signals for making the right decisions on both sides of the market. This was very basic and quick overview, but just so you can see a different style of candle. If you enjoyed this video or any of the previous videos in our series, please feel free to come join us in a noise-free, friendly, productive, and affordable environment with other traders to learn, trade together. It's a 5-day free trial, $7.99 a month following that. Check us out. Thanks a lot.